Is it possible to find a good investment opportunity in Dubai for just around $200,000? Well, the answer might surprise you. Currently, there are more than 40 different areas where you can invest this money, but only a select few can give you great returns. So the question is, where should you invest? In this video, I'll share the 6 best affordable areas that we recommend our clients invest in right now, including one literally nobody's talking about. Starting with an area that's extremely well located. It's next to Dubai Creek, has its own metro station, is just 12 minutes from downtown, and still $220,000 or 820,000 dirhams is enough to buy a studio here. And in 2029, when the Blue Metro line is completed, Creek Harbor will be just minutes away. Even now it generates decent rental returns, but until recently it wasn't popular at all. But this was previously a leasehold area. Only GCC citizens could fully own properties here, and other investors could only lease it for 99 years. But recently, it's become a freehold area. Now there will be a lot more investment in the area, and it's got much more potential. This means better infrastructure, buildings, green spaces, and an overall higher demand. All this attracts big developer names like Ellington and Benghazi, who are now probably the most active builders in the area. So for investors, this is a great opportunity to invest early, before it grows in value. This area is called Al Jadaf. The current starting prices are among the lowest in Dubai for properties this close to key city spots. For the kind of project we'd recommend investing in, you can expect to pay $226,000 for a studio at around $483 per square foot, $330 for a one-bedroom at $422 per square foot, and $585,000 for a two-bedroom at $465 per square foot. And the newer buildings have already shown value appreciation during construction. The growth here has outperformed the market, increasing by 45% since 2022. The rent-to-price ratio ranged from 7 to 8.4%. The highest is for studio apartments. Here's a specific example. This 33-story residential building is called Benghazi Avenue. It had a value appreciation of 42% since 2022, and the rent-to-price ratio now is 7.6%. And this was an older Benghazi development, from before they updated their style and quality, but even still it's grown that much. So what's a good investment in this area? In our opinion, the best upcoming project in the area seems to be coming from Benghazi. There aren't many details yet, but here's what you should know. Benghazi has some of the fastest construction timelines in Dubai. They're great if you're looking to cash out quickly, because most likely they'll need around 1.5 years to build it. Not only do they deliver quickly, but their rental returns are really solid. Here are the gross yields on their recent projects. They're really high. The average is around 10%. When it comes to their work in Al Jadaf, they've already completed 2 successful projects. Benghazi Gateway and Benghazi Avenue gave a rent-to-price ratio of 7.5 to 8%, beating the rest of Al Jadaf. And now they have several more plots in the area. Their next project hasn't been announced yet, but it could be here or here. If this is something you might be interested in, my team can help you take the next step. I run a real estate advisory and brokerage company here in Dubai, and we help international investors purchase high-return properties across the UAE. We'll support you through the entire process, from shortlisting projects based on your goals and limitations, to assessing the most attractive opportunities based on data, securing the best unit, and eventually renting out or reselling the property for you. Just click the link in the description, scan the QR code, or send us a message on WhatsApp to book a free consultation. For now, let's take a look at another area that's known as being great value for money. This area stands out for a few key reasons. It's inexpensive, it's great for renting out, and just like Al Jadaf, it's a good location. Just 20 minutes from Dubai Marina and downtown. There are mostly low to mid-rise buildings here, and this has some major benefits. First, it's much easier to drive in and out the area during peak traffic. Second, it means that the buildings are generally completed more quickly. And third, it's a much lower density than other areas. Later in this video, we'll compare the unit supply in this area and other neighboring areas with JVC. You'll see why less buildings is an advantage. This area is Arjan, and another big reason why it's such a great residential area is its proximity to offices. Right next to it is Science Park. It's basically a sub-community within Arjan. It currently has several completed office buildings and many more are under construction. So Science Park is becoming a big business hub for companies in the healthcare, pharmaceuticals, and biotech. Pharma giants like AstraZeneca and Pfizer have their offices here, and in total there are around 500 companies. Arjan has grown by 50% since 2022, 20% higher than the market average. And still, properties here are quite affordable. and it's great for renting out. Studios have an 8.7% rent-to-price ratio. 1-beds and 2-beds are around 7%, and 3-beds are 7.6% on average. Some buildings are doing particularly well. For example, Marquis Signature. This developer isn't well known, but they're worth paying attention to. They've only been around since 2018 and have completed a few projects, including 2020 Marquis and Marquis Signature. Sales for Signature were launched in 2023, and since then the average prices have grown by 29%, in line with the average in the area. But the rent-to-price ratio is 9% for 1-bedroom apartments, 7.8% for 2-bedroom apartments, and 8.2% for 3 bedrooms. For an investment in Ercan, we recommend taking a look at another Bengadi project. I never meant to make this video focused on Bengadi, but they happen to have a serious presence in the affordable segment. And in our opinion, their project is the most promising in the area. It's called Bengadi Hill Views. It will be inside the Science Park area, and there will be more than 700 residential units. That's not a low number, but because of the low-rise buildings in Ercan, you can expect open views. A studio starts at $222,000 at $541 per square foot. A 1-bedroom starts at $327,000 at $387 per square foot, and a 2-bedroom starts at $535,000 at $388 per square foot. And to estimate the rent, we'll analyze similar buildings close by. A 1-bedroom unit in a new Marquis Signature in Ercan rents for approximately $24,500 per year. Meanwhile, an older Bengadi project in GVC, which is a neighboring community, has 1-bedroom units renting for around $20,400 annually. Bengadi Hills will be newer and better quality than Bengadi in GVC that we used for comparison. And to be super safe and make a conservative case, we'll assume that the rental rates will be lower than Marquis's. We estimate that annual rental revenue and rent-to-price ratios for this project would be $16,800 for a studio at a rent-to-price ratio of 8%, $23,000 for a 1-bedroom at a ratio of 7.7%, and $38,000 for a 2-bedroom with a 6.4 rent-to-price ratio. Its expected handover date is the second quarter of 2026. Not far from Ercan is another area that's developing fast, but it's even less hyped. This area was designed and developed by Nahil more than 10 years ago. It has the same location benefits as Ercan and GVC, 15 minutes from Marina and 20-25 minutes from downtown. Out of around 5,000 ready units here, roughly 40% are villas. The rest are apartment buildings, and in most cases they were built quite some time ago. And while neighboring GVC was going through more and more launches, this area was under the radar, but recently everything has changed. Big developers started announcing residential buildings here one after another. Not all of them are great investments from our point of view, but I'll share the one that stands out in a minute. In addition to new residential projects, some major infrastructure developments were announced. Some time ago there were plans to build a local mall. The construction works were going on and then they were frozen. But now Al Khali Avenue Mall is eventually being built again. It'll have around 350 shops, a cinema, a supermarket, so it will be a decent shopping spot for people living nearby. The area is Jumeirah Village Triangle, or GVT, and the entry ticket in this area is around $200,000 or 740,000 dirhams for a good studio. And because the properties are so affordable, there is a great rental return. The older buildings here are even more affordable, and because of that, there are great rental returns. The gross yields range from 7.5 for a 3-bedroom and all the way up to 9.8% for a studio. Average apartments in this area have grown by 66% in value since 2022. I'm sharing this data because I did for all the other areas, but it seems exceptionally high for an area where almost nothing was going on, right? This growth was mostly due to a project called The One, which was completed in 2022 and cost 3 times the market average. The typical apartment has achieved a much smaller increase, but overall it's all irrelevant. New projects will be on a completely different level of quality, with greater amenities, and therefore much more attractive to residents. So they'll have their own dynamics. And one project we think you should look into is Sol Levante. It will be a residential tower with retail and office spaces, with units ranging from studio apartments up to units with 2 bedrooms and a study. Sol Development isn't well known, but they've been operating since 1975. They've completed 9 projects as developers in the past, all of great quality. There is a great range of amenities in this project: pools, jacuzzis, outdoor cinema, 2 gyms, a spa, a co-working space, and many others. Its expected handover date is the 3rd quarter of 2028. The starting prices are the following: A studio starts at $200,000 at around $480 per square foot. One-bedroom apartments cost from $354,000, averaging roughly $404 per square foot, and two-bedroom apartments average $480,000 at around $387,000 per square foot. And another important feature is a 50-50 payment plan. There aren't any good comparisons in GVT, so to figure out rental returns, we focused on high-quality comparable buildings in GVC. Let's take a look at Oakley Square, Belgravia Heights, and Oxford 212. We assume that Sol Levante will generate similar rental rates. Which brings us to a rent-to-price ratio between 7.8 and 8.4% for studios, around 9% for one-bedroom units, and roughly 8% for two beds. I'm pretty sure many people haven't even heard about this project, but there is another one I'm going to tell you about. It's even more unnoticed, though its area is quite hyped recently. This neighborhood has become really well developed, and there are lots of stores, including Waitrose supermarket, pharmacies, medical clinics, and restaurants. It was originally built to include a Formula One grade circuit capable of hosting international Formula One events. But instead they built the Dubai Autodrome, which unfortunately wasn't quite big enough for Formula One. Now it hosts smaller races, sometimes at night. This is the main disadvantage of the area. 2025 was an outlier in terms of growth. So we'll show you between 2021 to 2024. Apartments grew by 37% on average. But this area is on the list not because of the price growth. Again, the main benefit is that the rental returns are very high. An average studio rents for $14,000 annually, giving a rent-to-price ratio of 11.6%. One bedrooms rent for $18,500 annually, which gives a 9.1% rent-to-price ratio. This area is Motor City, and there are generally no doubts that the rental demand in the area will be growing. The issue here is with the pricing of new developments. They are not cheap at all. However, there is an upcoming project from a decent developer that's really cheap compared to everything else that's being built here. The prices start at $218,000 for a studio, which is around $369 per square foot, $300,000 for a one-bedroom, at $375 per square foot, $476,000 for a two-bedroom, at $348 per square foot, and almost $800,000 for a three-bedroom apartment with a pool, at $380 per square foot. Now let's see how the prices per square foot compare to similar buildings in Motor City, 15 Cascade by Eman and Shoba Orbis. All the prices on your screens, and for this building they're 25 to 35% lower than competitors. For all the sizes, without any exceptions. And we've visited these developers' ready buildings and know their quality. They're good. To estimate rental returns, we look at their other project in JVC. This building currently outperforms JVC's rental rates by 35%. And it's likely to be a similar situation in Motor City. So we estimate the following rental rates: $13,300 for a studio, $19,000 for a one-bedroom, and $28,500 for a two-bedroom. These indicate a rent-to-price ratio between 7.5 and 8.6%. And this is conservative. The expected handover for this project is the final quarter of 2027, and the payment plan is 60/40. If this sounds like what you're looking for, a cheaper project that isn't overhyped and overpriced, drop us a message. Motor City, Arjan, and GVT are all quite close together, and they also have a big and famous neighbor, JVC. JVC is very popular but controversial because of the huge number of upcoming buildings. So let's see how these four areas compare in terms of growing supply. JVC right now has 38,000 ready apartments and 28,000 more planned. In total, it's 66,000. To see if it's a lot or not, let's compare it to Arjan. Arjan is just a bit smaller area, but it's still very comparable in size. Now it has around 10,000 apartments, and expecting 10,000 more to be delivered. That's 20,000 in total, more than 3 times lower compared to GVC. Motor City and GVT are tiny compared to these two, but they will expand quickly. Now Motor City has only 4,000 ready apartments and 7,000 under construction, and GVT has 3,000 and is expecting 7,000 more in 3 years. What you should know about the future supply numbers is that they never come to life, because of the delays. In 2028, when they are supposed to be completed, a big portion of them won't be ready. But now let's go south, discuss Dubai South, the area. But Dubai South in general is not on this list. There is one specific location that we see huge potential in, and no one's talking about it. The area is going to thrive because of one huge-scale capital project, one of the most massive mega constructions that ever happened in the UAE, Al Maktoum International Airport, and it's going to make a significant impact on the area. No, I'm not talking about the airplane noise. It's going to create over 500,000 jobs. And the staff are going to need to live somewhere affordable. However, the surrounding communities with million-dollar townhouses won't work for them, but there is a specific location that will. And you can enter now while the prices are still super low. We're going to talk about Dubai South Residential City. It's here, very near the airport. Currently there isn't enough data to say anything about the value appreciation for these apartments, because the area is so early stage. There are very few villas and almost no apartment buildings yet. So instead we'll show you a new project that's very affordable and built by a strong developer. This will be built in 3 phases. Each phase will deliver a new building, but all of them will be connected with one shared podium. This podium will include cafes, business center, a cinema and other facilities. The first building is expected to launch by the end of June, and the handover is planned for 2028. The prices are not final and not officially confirmed yet, but in this first building, 1-bedroom apartments are expected to be from $190,000 to $220,000 and will be about 650 square feet in size, which gives us around $335 per square foot. 2-bedroom apartments will likely be from $300,000 to $325,000 and will be 900 square feet or larger, which gives us $333 to $363 per square foot. These prices are exceptionally low. In other areas, you can only buy a studio for the price of 1 bed here, and buying a good 2-bed for $300,000 is almost impossible in the current market. This means buyers and investors are getting a much better entry price, especially considering the quality of the project and all the amenities included. It's a strong opportunity for those looking to invest early in a growing area like Dubai South, with a specific target renter in mind. But like any investment, there are some risks to be aware of if you are considering buying here. The first risk is that the airport might not grow as fast as everyone hopes. It is planned to be the biggest airport in the world, and work has already started, but big projects like this can take longer than expected. If the airport grows slowly, the number of people moving to the area could also grow slowly. The second risk is that Dubai South is a large area with many buildings coming, so you can only make a good profit if you buy now at a lower price, before prices go up. But if you're looking for a safer play, but still with the benefits of an early stage area, our final area might be the best choice. As in other areas we discussed, nothing remarkable was going on in the neighborhood for years. It was always somewhat in demand because of families and students, but now developers like Imtiaz, Leos and Saman are investing heavily here too. The end-user profile here is a family of expats. Good road connectivity allows to get downtown in around 20-25 minutes, there are 3 parks, grocery shops and buses for public transport. There are also lots of nearby schools, which range from good to outstanding, including French and German schools. These schools are located in Academic City, an area across the road. And Academic City has more than 27 universities and colleges, and this means that the area we're talking about is also convenient for students. Since 2022, the area has grown in value by 70%, far outperforming the market. That said, it's important to keep in mind that it was bouncing back from a market dip between 2017 and 2021. And the fact that new developers are attracting attention to the area have also contributed to the price growth. But right now the rental returns are fantastic. Studios are at an 11% rent-to-price ratio, while bigger units are between 8.7 and 8.8%. This is because ready properties here are quite cheap. As more expensive projects arise, the averages are likely to decrease, but they'll still be among the best in Dubai. The area is Dubai Land Residence Complex. The one downside for such a distant community is that there is currently no metro access. However, the Blue Metro line will have a station in Academic City by 2029, and the project we think you should take interest in is Cove Edition by Imtiaz. If you're not familiar with Imtiaz, they're a vertically integrated developer, meaning they have an affiliated construction company, which allows them to have a full control over quality and delivery timelines. Imtiaz always delivers fully furnished, fully designed, high-quality units. This gives landlords an opportunity to price their units significantly higher than the area's average. And their next project here is Cove Edition 6. It will be completed by the end of 2027. The number 6 in the name gives us a hint that there will be other similar buildings, so you'll likely face competition. I wouldn't recommend you to go for this project if your goal is quick flipping, though it's also fair to say that all the units Imtiaz planned combined are still lower than some developers are having in just one tower in areas like Business Bay. And for the quality, the prices are not bad. You can get a fully furnished studio for around $190,000, a one-bedroom for $270,000, a two-bedroom for $405,000. MTAs are also flexible with their payment plans. You can choose the 50-50 structure or the 70-30 structure. But this plan is more expensive. A good rental return from this project seems very likely. A regular two-byline studio apartment rents for around $11,000 annually. A one-bedroom apartment rents for $14,700. And a two-bedroom is $19,000. But historically, MTAS has rented for a higher price than other units in the same area. So we expect these new units will be rented for around 40% higher than other units in Dubai land. So this leads to the following estimates. $15,000 per year for a studio, $20,500 for a one-bedroom, and $26,500 for a two-bedroom. This works out to a rent-to-price ratio between 6.6 to 8%. And we're conservative with these numbers. Some apartments in Dubai land of a much lower quality are rented for around the same. So, if you're interested in this area, any other area I mentioned in this video, or investing in Dubai real estate in general, get in touch with us. However, if you're still exploring and want to learn more about the market, I recommend watching the video we made on the most common myths about investing in Dubai properties.